Welcome back, everyone. Today we are going to be continuing this series of my Palantir valuation model to explore Palantir's bear, base, and bull cases. Thank you for the positive reaction to the base case video. Now again, these are just my numbers, my opinion on what a bear case could look like for Palantir. Keep in mind, I last revised these numbers last month, so some of them could be outdated, and I will be working through a new version of my model to be published after Palantir's earnings next month. So without further ado, let's dive into the bear case. So here we are on the revenue buildup, and we've got the two segments for Palantir, commercial and government, which combine to the total revenue for Palantir. So let's start off with commercial, the bear case. What we're looking at here is something, again, above that growth rate that we have of guidance for Palantir of 30% through the end of 2025 to get us to $4 billion in revenue in the year 2025. And this is a 5-year model, so I actually throw it out through 2026. So let's talk through this. I have Palantir commercial growing pretty substantially, considering this is a bear case at around the 40% range, really throughout this entire 5-year model. Now we know they did 34% last year in 2021. So is this even possible to expect this high of growth for this multi-year period? I really think it is possible, given what we've seen Palantir doing with their growth rate, just growing the number of customers they have on the commercial side. And we know the way it works with their flywheel that I talked about in the last video, where the more clients they're able to get, they move those clients from the acquire to the expand phase, where they go into the organization and really increase the amount of revenue as Palantir gets more broad into the organization. And then, of course, we have the scale phase where that really takes hold. Sure, Palantir will churn some of those customers. They might not scale as fast as they want to. Some of them won't work out. But overall, what we've seen with Palantir's numbers and what's been powering their growth has been that increase from the acquire phase and moving up, getting much larger within organizations. And Palantir, over these next 5 years, I believe, will be working with smaller organizations as well, that more medium-sized business. And I think they have much room ahead of them in terms of growth on the commercial side. A lot of initiatives are going, expanding the breadth of what their solutions can provide and offering more narrow solutions where it's not just one full stack, one thick product, as Alex Karp says, but they're narrowing it down to make it more accessible for businesses that might not entirely understand the power of Palantir's product. So I think that's possible. Again, this is the whole point of why I published this model, and you can find it in the description if you want to change your own numbers, but I'm going to leave it there for now. And then on the government side, I do expect Palantir's government revenue to fall underneath that guidance of 30%, as we've talked about many, many times. And what that looks like for me, even with their 47% they had last year, could be 28, could be 29, could be 30, but largely under by a few percentage points at least, that guidance. And so I don't want to belabor the point here, but let's just drop down to that year-on-year growth. Last year we had 40% year-on-year growth. That was great. I believe the year before, in 2020, we also saw 40%. So what does this all amount to? Let's really dive into what this amounts to, and that really amounts to what I believe is Palantir, even in a bear case, is I believe their guidance is conservative. And when I say that, I mean that, right? I think they can well exceed their guidance. We talked about the base case, and then we're looking at the bear case here. Because what's interesting is they say in the year 2025, they should have $4 billion in revenue, right? So this total $5 billion might actually look high when Palantir's talking about $4 billion of guidance in the year 2025, but it's in a bit of a contradiction to what they're referring to when they say they're going to do 30% of about $4.4 billion in revenue. So I am coming in above that on a bear case. That's definitely a point of concern. So let's say we could lower some of these numbers to be more accommodating to a bear case. Again, I think these numbers are more in line, as we've seen with Palantir's guidance, which has proven to be conservative quarter on quarter, year on year, as they talk about. But let's just say, for instance, Palantir's commercial side doesn't do as well. Let's just say, for the sake of argument, that we're actually going to edit some of these growth rates in the bear case. You've already seen the base case. And let's say Palantir's down to 35, 36, 37. 36, 35. And the reason I have a bit of a bump here in the growth is I think that you give Palantir's sales team a couple years to get built out and fully functional, and you can really see some moderate effects from that, even in more of a bear case with all of their commercial operations. So I think that's not unreasonable, but as you get towards a multi-year period of that high of growth, I think you could see it start to taper off, as would be expected as the base continues to build. But then let's hop down here to the bear case for the government, which we could just say 25 and 26, 27, same type of thing. We've talked about all of these scenarios where Palantir is useful. We could talk about this bear case growth, as you'll see, is much less if we change the numbers from what I had earlier, even comparing it to the base case. And in this scenario, we're looking at the base case of the commercial growth for this year. Of course, this is probably not going to happen, but dropping from 43% to 35% is a pretty substantial revision. So let's come down here to the total revenue. And now we have some total revenue of 29%, 30%, 31 or 32, 31, and then 30%. So you can keep lowering these numbers. I think it gets less likely the lower that you actually go with them. But this way, we know that we are below Palantir's target guidance, at least in some scenarios here, and largely in line with what they've been expecting. So let's not get caught up in the revenue too much. We have some more of the model to continue with. And if we go to the top here, Palantir, this is the bear case. And we finished today, which is July 14th, 2022 at $8.90. Again, same sort of stuff from the last time. Green in my model means a reference to another sheet. Black means a formula and blue means an input. We're going to look at the income statement in a moment, but just know that these key drivers are what affect it. And we just modeled out this revenue. It's pulling it from the revenue build tab. And then we can come down to the gross margin. As I talked about in the last video, I'm expecting 85% in the long run, as Palantir's management has said, and we could adjust this. Maybe it's not going to happen as fast as I said in the base case. Again, totally up to your interpretation. We could say 75, 76, 77, 78, 79, something like that. That's a pretty big revision, but let's say they at least get to 80% in the year 2026. And then the adjusted operating margin, also very important. We can revise that down just 1%, just to be more conservative in this case, as it is a bear case. And then that gives us the important numbers that we use going forward. So here is the projected income statement. We have these 2 years of historical data, and here are the estimates from the work that we've been doing so far. So we think Palantir could top out from about $2 billion in 2022 all the way to $5.8 billion in revenue for the year 2026. And a cost of goods, that could be too high, that could be too low. And then we've got our gross profit right there, our adjusted OPEX. Again, I talked about why I use adjusted figures before, and that is not on this sheet, but we can talk about it in a moment. Our adjusted EBIT of $1.7 billion. And then we get down to our adjusted net income of $1.4 billion. Okay, here we are on the Palantir equity method valuation slide, and we're going to be talking about what potential price target we could get from Palantir if we're looking 5 years out in the year 2026. And this is, of course, for the bear case. So I've got some very bearish multiples here, which is what Palantir's trading at right now, which is 10 times, as we can look at right here, the trailing 12-month revenue multiple at 11 times right now. That's come all the way down from 45 times in 2020 or so, and a $17 billion market cap for anyone that hasn't checked recently. So anyway, what I'm saying is, of course, as Palantir's revenue goes up, if we fix the multiple, which is not typically how you do it with growth stocks, not at all, but we'll do it in this case because I know some people don't necessarily understand the idea of how growth actually factors into the valuation, especially on a multiple basis. But let's just say Palantir's worth no more than 10 times sales, and we can say that through the year 2026, and that can get us to a $58 billion valuation based on that alone. And then we can come down here, and using Palantir's adjusted net income, we can do a earnings multiple, a multiple for what Palantir earns, of course, before the stock-based compensation, which is backed out. But let's just focus on that for now. I put in 25 times, which is about Microsoft. I think that's a pretty fair multiple to put on Palantir. Again, the multiple should be much higher starting out and lower over time, but we're just going to fix it to make it simple. And based on that adjusted net income, we get to $34 billion in the year 2026 for evaluation. So before we get to the price target, I just want to talk about Palantir's dilution, as we obviously know makes a big effect on the valuation. So how am I incorporating that here? Well, once again, if you saw the last video, you already know, but I'm not actually factoring it into Palantir's earnings as we just saw, but rather I'm using it, the share dilution in terms of the shares outstanding, which you have to do, penalizes Palantir for this expanding share count, which accounts for it. Of course, you could be more strict on that and just use their GAAP earnings figures when they actually have GAAP earnings. But I really don't think that is how you do it with a company like Palantir, because it's a non-cash expense, and I totally understand the argument that it should be counted, but this is how we are counting it with the shares outstanding. So these are the numbers I used in the last video. We could raise these nominally and see what happens. But just know they did 14% last year and are targeting a normalization. That brings us to 3 billion shares outstanding in the year 2026. I think this is aggressive. So here we are with the valuation, what you've all been waiting for or skipped ahead to, and I see Palantir is populating here at $16. I did not see this before because we changed some numbers, but based on everything we've run through today, Palantir would gain 76% from its share price in 5 years. I already know what the comments are going to be filled with those people that think that this is the expected outcome for Palantir. It could be for you. You could actually believe in these numbers. You could even think they're lower. But when I see this number at around $16, it really does explain what could happen if almost everything goes wrong for Palantir. You could always make the case that it could be worse, but I think you could very well make an even easier case that Palantir should be trading at maybe 15 times sales in 2026 and 55 times its price to earnings, and then all of a sudden you're at a 210% gain, and this is even based on a lower revenue, lower growth rates, and dropping the margins as well. So this was an exercise in what I believe to be a fairly bearish outcome for Palantir, which is very important as shareholders to be doing this type of analysis. And even if you don't type in all the numbers, build a model yourself or anything like that, it's important to be thinking through these different scenarios and weighting probabilities to them to be able to understand what a potential outcome could be for a stock that you own. So as you'll see, there is a lot more to this model. I will be continuing with the bull case very shortly because there does seem to be some continued interest, and thank you for that. Leave a like if you're looking forward to it, and thank you for watching.